Hi everyone, I'm Noah Lui, Head of Investors Advisory from RHB Bank. Welcome to our podcast series. Today is an interesting podcast session in which I have Mr. Barnabas Gan, Acting Group Chief Economist, RHB Banking Group. Barnabas, as we are getting closer to the US presidential election on 5th November, many can't stop to discuss what is ahead. As a leader, you have great influence towards the global economy and setting up on the future policies. As of end August, latest national polling averages shows that Kamala Harris is leading in poll in US presidential race. However, worth to note that Donald Trump was also behind in the election poll when he won the 2016 election as US president. We leave that discussion on the accuracy on the election poll to a different session. I read your article in the Star, namely 5 scenarios that may happen from Donald Trump 2.0. I pick a few key topics which are relevant to our investor in our discussion today. Firstly, is on the US-China relations. Is there any concern if it worsen when Donald Trump wins the US election?
Hi, good day, everybody. Thank you for having me on the call. I think this is a really interesting topic and really pertinent to understand how would a potential Trump win actually impact the global economy, Asia, and really especially ASEAN and Malaysia as well, given that it's our home ground. I think what's important really is that how US relations may materialize with China will be the cornerstone of Trump's presidency. Arguably investors are actually most concerned about a few key factors, which is potentially higher US-led tariffs against China and the impact on global growth and inflation. Just some numbers here, on estimates, the tariffs imposed during Trump's term, as when he was president the last time, were estimated to have dragged global growth, of between 0.1% to around 1.4%, between 2018 to 2020. And of course, with the Trump's recent proposal of a 10% tariffs on all imports and 60 to 100% tariffs on the Chinese specific tariff rates, this could also mean a uptail, or uptick in US in headline inflation towards a 4% handle with upside bias into the next year. So what's important really is that we have to understand, that these are the pertinent issues at hand. We have to sit tight and understand that we may be heading into a highly more protectionistic, tariff-led global economy, and that could actually may mean a curtail of global growth and a curtail of global trade wins as well into the next year.
Still on the US-China tension, given that Donald Trump may oppose countries perceived to side with China, do you think Malaysia could be at risk in this scenario?
So I think this is an interesting question, because this will pertain, and affect the investor sentiments as well as how investors may behave in ASEAN, especially if Trump does any spillover effects into ASEAN, given the potential trade exposure. China has been one of the largest trading partners, of Malaysia, if not ASEAN. And that essentially means that even though if we do not see any specific or direct tariff proposal against ASEAN by Trump, the downside pressure from China's growth, from the US tariff-led moves, will mean that a slowdown in China will indirectly mean also a negative impact on ASEAN, including China, just simply because of trade exposures as well as investment exposures. We don't discount the potential direct policies that Trump may introduce, but the truth is that back in his presidency in the past, there was little evidence of such a policy that was introduced then, against ASEAN. So I think that's a mode of consolation there, but I think we can only wait to find out.
Next is on the US Fed interest rate policy. Federal Reserve has recently announced that it's the right time to start cutting interest rate. I do agree that from your article also commented with potential increase in import tariff, inflation and cost of prices may push higher again. With this in mind, do you see a risk of significant reversal in the interest rate policy if inflation spikes due to this tariff?
I think this is clearly a scenario that we cannot discount on. Trump's proposal to impose tariff of 10% on all imports and 60 to 100% tariff on Chinese imports into the US will certainly bring about higher cost of production, especially raw materials and semi-produced materials into the US. And that basically means that US inflation, if these tariffs actually come into force, will mean US inflation may likely point higher towards a 4% handle with upside bias, depending on how severe the tariffs are going to be. So let's just take a look at how inflation is trending right now. Inflation has been trending and slowing, at least into the second half of this year. So that's actually good, whereby the US Federal Reserve is actually slated to potentially cut rates in the second half of this year. Yeah, so all is hunky-dory, at least at this juncture. But the risk really is that with higher inflation at hand, and we have to understand that the US Federal Reserve's dual mandate, and one of them is actually stable prices. And if stable prices will not be achieved in 2025, given the upside impact on prices from the tariffs, then there is likely a risk for some potential reversal, or maybe less than what was projected rate cuts in 2025. The markets are actually calling for at least 4 rate cuts in 2025. RHB House View is calling for only 3 rate cuts. But if there is going to be an uptick in tariffs as well as an uptick in inflation, global inflation and US inflation in the next year, then potentially we may even see less than 3 or maybe no rate cuts at all.
Assuming Donald Trump pursues protectionistic policy as the next US president, will the move to de-dollarize means higher gold prices in the medium term?
Yeah, so I think this idea of de-dollarization is a very interesting one because it's not new. Yeah, it started during the global financial crisis of 2008. And this basically surfaced the vulnerabilities of the global economy as well as the reliance on US economic prognosis, and that will actually impact how dollar actually moves and impacts how trade valuations also trend. Just simply on the US economy. Investors know this. Government and policymakers know this, and hence this move to de-dollarize may likely be accelerated, especially when Trump's presidency and his calls for higher tariffs could potentially dampen global growth and accelerate the drive to de-dollarize. So I think that this is actually important because we already see that other nations, and let me quote a few, maybe the region of Brazil, Russia, India, and China, or the BRICS, they have already been looking to establish a new reserve currency, which is backed by the currencies of their own respective economies. And of course, the media also reports that Malaysia and Thailand is also seeking to join the BRICS, of course, with other supporting reasons. And of course, the thing is that the issue is that there still remains to be a lack of suitable alternatives to USD, to the greenback, and that basically means that probably the move to de-dollarize will still take some time. We are very mindful of the dominance of the yuan, which is at least at this juncture already accounting for at least 6%, if not more, of global trade. And this basically means that there is really a rising move, at least from Asia, to try to move away from the dollar as the lingua franca of the global trade currency. So I think we can only wait to see what is going to be the next trend ahead.
Okay, so this is my last question. So let's move on to a bit to the Harris economy. Presidential candidate Kamala Harris has once expressed a desire to impose tax on unrealized capital gain. Is this a material concern? Could such policy potentially lead to a stock market crash?
Okay, let's talk about these unrealized tax gains, first. And there are hurdles that I would like to hear from the US grounds before we can truly give a view. I think first and foremost, I think the details of this proposal remains very speculative. Neither the Biden administration or the Harris campaign have actually said exactly on how they will pursue these policies. More importantly, in the US, it's also said that there is no jurisdiction that has actually been passed on this kind of wealth tax, on securities, and there's no working template, to work on. So I think this basically may raise, legal questions, valuation questions, on how to actually pursue and tax such equities, including private and illiquid assets, and of course pricing remains highly speculative, especially when this is unrealized, tax gain. But I think if we want to bring this around and talk about how this might impact the US equities, as well as how risk taking is going to happen, I think let's call a spade a spade. Yeah, we can't discount the negative impact if such a proposal happen, because this will mean that a lot of the valuations, when from capital, from investment, and from the equity valuations might be locked up in taxes, and this may mean that some risk aversion might take place, given that this liquidity is being drawn out of the economy. But truth be told, if you look at the flip side of the coin, the increased revenue from this tax gain may actually help US coffers, government coffers, and could actually mean a buffer against the unexpected economic mishappenings, or recession, if future recessions that will actually may happen, and that could actually give a credible buffer, and prevent potential shortfalls, in economic downturns. The thing is that if we also look at risk appetite at this juncture, our RHB risk sentiment index is still showing the uptick in risk appetite. And now that risk appetite, according to our model, is now at very high risk state, risk on mode. And this basically suggests to us that investors are still paying more attention to a potential Harris or Trump win. They are less affected by who's going to win, given that it's too close to call. Given how the polls are actually trending for both Harris and Trump. But the thing is that high frequency numbers in the US and high frequency numbers in China and ASEAN still remains buoyant and supportive of global growth. And I think this is the one key message that investors should pay attention to.
Thank you, Barnabas. This is an intense topic which is timely and relevant. I trust your insight has given our investors some perspective on things to watch out for from the upcoming US election. Dear investor, do visit our RHB Merge website to view more of our other podcasts and Money Chat series to keep yourself updated in making informed investment decisions.